Welcome to Inside India. I'm Amitot Singh. These are your headlines. The US House lawmakers have passed a stopgap funding bill to end the record-long government shutdown, with President Trump set to sign into law that particular bill. Attention now turning to the data releases and what that's going to mean for the Fed's December meeting. The RBI may have a stronger case for a year-end rate cut after inflation slumped to a record low in October. And India's cabinet passing a $5 billion support package for its tariff-hit exporters as New Delhi and Washington try to iron out a trade deal. All right, a look at the Asian markets first. Japan's Nikkei had actually gone ahead and inched higher. It has inched higher, about 51,166.78 at this point in time. And of course, the Kospi, the markets in Australia and New Zealand down, as is the case with the Hang Seng and the Straits Times. But what you're seeing really is a reflection of what has happened in the US. We did see a mixed result out there. We are awaiting US economic data, but the Wall Street, that's where the focus is, given what's happening with the US shutdown and being lifted most likely in the next, well, couple of hours perhaps, maybe even minutes. But what you're seeing also is that the valuation conversation around the AI bubble, that is playing into the market and the sentiment also. The big question is whether the US economic data will actually come out soon enough for Wall Street to get a sense of how it should react. Remember, Dow Jones notching a record high, and that perhaps having an impact across Asia. But let's also give you the latest on the longest government shutdown in US history, on track to end soon after the US House of Representatives passed a funding bill in a 222 to 209 vote. 2 Republicans voted against and 6 Democrats backed the bill. The White House says President Trump will sign the bill any moment now. The bill extends funding through to January 30th, but leaves out healthcare subsidies. The blame game is continuing in a deeply divided Capitol Hill. It continues because the House Speaker, Mike Johnson, speaking right after the vote, has pointed a finger at the Democrats once again.
Absolutely no question in anybody's mind now that the Democrats were responsible for this. What happened? Millions of American families went without food on their table. You had millions of Americans stranded in airports with their flights canceled and delayed. You had troops and federal employees wondering where their next paycheck would come from. The Democrats openly admitted, many of them said it in their own words, that they used the American people as leverage in this political game. They knew that it would cause that pain to the people, and they did it anyway.
Now, the Democrats from both houses issuing a joint statement also laying the blame across the aisle. The Dems pledging to continue the fight to lower the cost of living and address the Republican healthcare crisis, calling on Republicans to force a vote to extend healthcare subsidies for 3 years. Also happening in D.C., President Trump is hosting some of the biggest names on Wall Street as we speak for a dinner at the White House. The financial heavyweights in attendance reportedly include JP Morgan chief Jamie Dimon, BlackRock's Larry Fink, Goldman Sachs' CEO David Solomon, and billionaire hedge fund manager Bill Ackman. It comes just 2 months after Trump held a similar gathering for tech CEOs, a mark of the administration's deeper ties with the corporate world. All right, well, the Indian markets, they come online in about 40 minutes. Here's what GIFT Nifty futures are indicating at this point in time. Wow, it's looking like we could see the Nifty inching a little closer to that 26,000 psychological mark. At this point in time, when it closed, it was at 25,875, so it had already jumped quite a bit. Remember, this is after 3 winning sessions, and it's likely to be a 4th as optimism over the US reopening is really the cherry on the cake of easing trade worries. Small cake, still cooking perhaps, but sentiment surely likely to be positive. And it's likely to also be impacted after India's retail inflation slumped to just 0.25%, making it perhaps even more likely the central bank will cut rates next month. But then take a look at that US dollar India rupee situation. How will the central bank handle the potential further weakening of the rupee to the dollar? That's really the question. The rupee at 88.5930 at this point in time. Let's also just break those inflation numbers I was talking about. Inflation just cooled to a record low of 0.25% in October, driven by cheaper food and tax cuts on consumer goods. The figure is well below the RBI's 2 to 6% target band, setting the stage for a rate cut as soon as December. Food prices fell over 5%, while vegetables dropped nearly 28% year on year. Analysts now see up to 50 basis points of rate cuts by early 2026, even as core inflation remains elevated on strong gold prices. India's cabinet has cleared a $5.1 billion package to support exporters hit by new US tariffs. The plan includes credit guarantees worth 200 billion rupees for collateral-free loans and trade finance support over 6 years to help small exporters. The move comes after Washington's 50% duties on items like garments, jewelry, and chemicals, a blow to India's labor-intensive sectors. Exports to the US fell 12% in September. But New Delhi hopes talks on a trade deal with the Trump administration could ease pressure. Implementation will be managed through a digital platform and perhaps will be key to understand how much pressure is eased and when. In the meantime, the Indian government now confirming Monday's Delhi car blast as a terror incident. At least 8 people were killed and 20 more injured in an explosion near Red Fort, a historic site from where Prime Minister Modi gives his Independence Day address from. Modi also visited the victims in a hospital. So far, the government had not labelled the blast a terror incident. The Indian cabinet passed a resolution calling the attack, quote, a heinous terror incident perpetrated by anti-national forces. The blast is being investigated under the country's anti-terrorism law. So far, they have not named anyone or made any arrests in connection with the incident. Here's what Indian Cabinet Minister Ashwini Vaishnav said after the meeting.
The Cabinet expressed its profound grief over the loss of lives in the terrorist incident involving a car explosion near the Red Fort in Delhi on the evening of 10th November 2025. The Cabinet directs that the investigation into the incident be pursued with the utmost urgency and professionalism so that the perpetrators, their collaborators, and their sponsors are identified and brought to justice without delay. The situation continues to be closely monitored at the highest levels of the government.
All right, we're tracking that development, but coming up, Indian pharma major Biocon swinging back to profits last quarter. What helped the top line? We will ask Shreyas Tambe, the CEO and MD of Biocon Biologics, after this short break. Stay tuned. Welcome back. Biocon Group swinging to a profit in its latest quarterly reports and posting a 20% quarterly jump in operating revenue thanks to strong demand in biosimilars, generics and CRDMO divisions. The Indian biopharma company generic business has also risen by 24% after recently launching product sales in the US and EU. All of them saw growth. Remember, Biocon has also collaborated with the state of California to improve access to affordable insulin across the US. And now reports are emerging that the group might be looking to merge its biosimilars arm Biocon Biologics with itself. Shreya Stambe is the CEO and Managing Director at Biocon Biologics. Thanks so much for joining us, sir. I did want to start by asking you about the quarterly results, but then this report has come, and now I'm duty-bound to ask this question about whether you're actually merging with the parent company. Can you give us an answer?
Yeah, and first up, Amitabh, thank you for having me on your show, and clearly an exceptional quarter. We've been consistently delivering good growth, and this particular quarter, again, you've seen that there's been a 25% growth in revenues on a year-on-year basis. But again, to importantly point out, the EBITDA growth has been even better. You've seen a 40+% growth in EBITDA on a year-on-year basis, same quarter last year. That basically tells you that there's been operating leverage that's starting to play out, which is what we had said at the end of last year, that as business ramps up, which it is, you will start seeing the same cost base starting to deliver on a much better profitable performance, and which is why you see a 400 basis points improvement in the EBITDA performance in the quarter that's just finished. It's a very strong quarter, and we believe that these are things that really set us up nicely in that accelerate phase of our strategic journey.
All right, that's wonderful. I just want to repeat the question I asked earlier. Apologies, whether there is any news on that you can share with us right now, and if you can't, that's all right. But about the merger with the parent company.
Well, that's actually a older development where Biocon Limited had actually put out a statement saying that they have set up a committee to evaluate options on what is the best way to unlock value in businesses that it has incubated. Biocon Biologics being one of the businesses that it has incubated. And unless the committee really concludes what that option would be, I don't think we have any new update at this point, Amitabh, to share with your viewers.
No, that's very helpful. That gives us an indication of what's likely to happen next. Let's just get back to your numbers, because I do say, a big congratulations to you for those numbers. Expected after the capitalizing of 3 new facilities, you're really playing the long game, test cricket, if I may call it. But what can you say materially will set you apart as the competition grows so intensively?
And I think that's a very important question. We've been in this space for a very long time. We're the only company in India, or from India headquartered, that has been approved to supply products like biosimilars in the United States at this point. We are a fully integrated company in that, where we develop our own products, we manufacture our own products at our facilities, and then we have our own commercial footprint in several countries. Commercial products, we commercialize them in over 120 countries. So it's a very robust model, allows us the leverage to operate across the value chain, and that keeps us ahead of the competition. Clearly, it's hotting up because people see that biosimilars are here to stay. There's tremendous opportunity in this space, and it can make a difference to patients' lives. So we feel very good about how things have shaped up, and we're starting to see the momentum that we've gained over the past quarters.
Mr. Stambe, I apologize. We're going to have to interrupt because we believe the U.S. President Donald Trump is speaking. Let's listen.
For hundreds of billions of dollars for illegal aliens and people that came into our country illegally. From gangs, from prisons, from mental institutions. They wanted to pay them $1.5 trillion, which would have really hurt our healthcare businesses and our recipients at levels never seen before. Today, we're sending a clear message that we will never give in to extortion, because that's what it was. They tried to extort, the Democrats tried to extort our country. In just a moment, I'll sign a bill exactly like we asked Democrats to send us all along, many days ago. This cost the country $1.5 trillion, this little excursion that they took us on. Republicans never wanted a shutdown and voted 15 times for a clean continuation of funding. There's never been a time when one or the other party ever didn't sign a continuation. It's just a continuation, not a big deal. It's a continuation, and we'll talk later. Yet the extremists in the other party insisted on creating the longest government shutdown in American history, and they did it purely for political reasons. I want to thank Speaker Mike Johnson, Senate Majority Leader John Thune, as well as House Majority Leader Steve Scalise, Majority Whip Tom Emmer, and numerous other great Republican leaders and congressmen and senators who are here and who frankly spent a long time in Washington getting this thing to go away. I also want to thank the broad coalition of Americans that stood with us in this fight to reopen government, including the Teamsters, the American Federation of Government Employees, the Fraternal Order of Police, AMVETS, the National Small Business Association, the American Farm Bureau, the American Trucking Association. These are all incredible patriots. The Airlines for America, the Allied Pilots Association, the National Air Traffic Controllers Association, and many others, unions and non-unions. Over the past 7 weeks, the Democrats' shutdown has inflicted massive harm. They caused 20,000 flights to be canceled or delayed. They departed so many times, so late. People were hurt so badly. Nobody's ever seen anything like this one. This was a no-brainer. This was an easy extension. But they didn't want to do it the easy way. They had to do it the hard way. And they look very bad, the Democrats do. They deprived more than 1 million government workers from their paychecks and cut off food stamp benefits for millions and millions more Americans in need. They caused tens of thousands of federal contractors and small businesses to go unpaid, and the total effect of the damage their antics caused will take weeks and probably months to really calculate accurately, including the serious harm that they did to our economy and to people and to families. So I just want to tell the American people, you should not forget this. When we come up to midterms and other things, don't forget what they've done to our country. I also want to call for a termination to the filibuster so that this can never happen again. If we had the filibuster terminated, this would never happen again. And don't forget, we have another date coming up in the not too distant future. We can never let this happen again. And we should be able to pass great, really great legislation. So I say terminate the filibuster because, by the way, the Democrats will do it immediately if they ever assumed office, which hopefully they won't. Today we had the highest stock market price ever in all of the different markets. We set a record. It's the 48th time in the 9 months that I've been in office that we had this record set. So think of that, 48 times we had a record set, but today is the highest of them all. We're going to break new grounds. Nobody would have thought. I have with us not only the great political leaders, but the great business leaders of our country. They're standing right behind me and right really alongside of me. And if we would have told them a year ago that we'd be having stock prices this high, none of them, in fact, I just asked them that question, none of them would have believed it. And that inures to jobs and, very importantly, to 401ks, which have also set a record today, a record high for the people that have 401ks. And also, I want to thank Walmart because they came up with a fantastic study. It was the cost of Thanksgiving coming up and the cost of Thanksgiving from a year ago under Sleepy Joe Biden. And we're 25% lower this year than we were a year ago. And it's a very inclusive report. So I want to thank Walmart. They've done it for many years, but we believe in that, and we believe in that company. I want to also thank the 8 Senate Democrats who finally did the right thing in voting to end this craziness, this madness. But unfortunately, the vast majority of congressional Democrats were happy for millions of Americans to suffer. They really did suffer, too. And the Democrats admitted, they said, well, no, we finally have a point. Even though people have to suffer, we finally have a point, and that didn't work out too well for them. But they really went out and they could appease the fringe benefits of their far-left base, but that didn't work out because now their far-left base is angrier than ever before. We actually elected a mayor of New York City who happens to be a communist. When was that going to happen? Remember, I said all the time during my campaign, we will never be a socialist country, and that's right. We turned out to have a communist in New York City, and if you look at his views, those are the views of a communist, not a socialist. So this is no way to run a country. I hope we can all agree that the government should never be shut down again, end the filibuster, terminate the filibuster. It'll never happen again. So with my signature, the federal government will now resume normal operations, and my administration and our partners in Congress will continue our work to lower the cost of living, restore public safety, grow our economy, and make America affordable again for all Americans. Again, costs are way down. Energy is way down. Gasoline is at $2.50 a gallon versus $4.70 for the Democrats. And we think we're going to hit pretty close to $2 a gallon. That's like a really massive tax cut. It's the equivalent of that. And speaking of tax cuts, our great, big, beautiful bill is giving everybody in our economy, middle income workers, low income, everybody, the biggest tax cut in the history of our country. And it's no tax on tips, no tax on Social Security, and very importantly, no tax on overtime. You work overtime, there's no tax. That's among the things that add up to the biggest tax cut in history. And one other thing, you hear about rich people with deductions. Well, when you buy your car and you borrow money, you're allowed to now deduct the interest on that loan. So you can take that interest deduction, and what you can take is that interest payment and deduct it for income tax purposes. That's a tremendous tax cut right there. But it all includes fixing the healthcare system that Democrats broke with the disaster known as Obamacare. Obamacare was a disaster from day one. It's done nothing but go up. And if you remember President Barack Hussein Obama, when he came up with this crazy idea, he said everything's going to be great. Rates are going to go down. Payments are going to go down. Everything's going to go down. It went the exact opposite, with the biggest increase of healthcare in any country. It's a disaster. And I'm calling today for insurance companies not to be paid, but for the money, this massive amount of money, to be paid directly to the people of our country so that they can buy their own health care, which will be far better and far less expensive than the disaster known as Obamacare. And I've had, I think, great support. I've even had Democrat support. So we want the money that would be going to the insurance company, which is hundreds of billions of dollars. Their stock prices have gone up by 1,000% in many cases, 1,000% over a short period of time, because our country stupidly pays them so much money with this Obamacare scandal. So I want the money to go directly to you, the people. And you go out and you'll buy your own health insurance, and you'll negotiate different plans, and you'll get much better insurance, and you will be an entrepreneur for yourself. So I'm always willing to work with anyone, including the other party. We'll work on something having to do with health care. We can do a lot better. We can do great. So much money is involved, and we're willing to pay so much money to the people. So we're going to pay a lot of money to the people. They're going to go out and buy their own health care, and we're going to forget this Obamacare madness. So with all of that, I just want to tell you the country has never been in better shape. We went through this short-term disaster with the Democrats because they thought it would be good politically. And it's an honor now to sign this incredible bill and get our country working again. Thank you. Okay, thank you very much. I don't know if you have questions. I think we really have a really great situation. We have a country that we love, and we have a country that's in great shape. As you know, we have now it's over $18 trillion invested in our country by other people and countries. That's a record. There's never been a country that had so much, and that money's going into also building new auto plants, new AI plants, new everything. We've never had a time like this. Thank you very much, everybody. I appreciate it. Thank you very much.
Thank you guys for going. Thank you. Great.
It's a great day.
Thank you.
Well done, Mr. President.
Great job.
Well, there you go. In the White House, in the Oval Office, President Trump going ahead and ending the longest running U.S. government shutdown in history, 43 days. This after the House passed the bill and sent it for his assent finally. This has been coming for a couple of days. We knew this would happen after the Senate went ahead and agreed on coming up with the numbers. 60 numbers were required, 60 senators. They went ahead, signed the bill, sent it to the House, and now what you can expect is a huge change. What did Donald Trump say? He said, we won't give in to extortion. He said this has cost the government $1.5 trillion, and all of that is because of the Democrats. He said that the Republicans voted 15 times for a continuing resolution, and the Democrats didn't allow it. He's also said that as many as 20,000 flights were either delayed or canceled. In fact, today itself, 900 or so were delayed or canceled, and he's called for a termination, the end of the filibuster, and on January 30th, this is when this particular situation will remain okay for. Right after that, there'll need to be a new bill, and we could be back in this situation, a potential shutdown there. But the focus will remain on what happens with Obamacare. All right, let's just go back to Shreyas Tambe, the CEO and Managing Director at Biocon. Sir, apologies for that interruption. It was required, and I'm sure you have U.S. interests, huge U.S. interests, in fact. Just give us an overview of what you just heard, the shutdown. You've already seen what Donald Trump has said a number of times on tariffs, on potential investigations into pharma companies, and then you have the end of this shutdown. How has it really impacted your company, and how do you view it?
Amit, first off, I can understand a very substantial development that you took the pause for, and I can understand. I'm very happy that things have moved forward. Great to see that. Your question on how we viewed the tariffs, I think if I just step back from that question to see what is the objective that the administration's been trying to achieve, I think the administration has always said that they are looking to see how they can make America affordable again. And that's really been their thrust. And a lot of the actions that you see have been to see how it can benefit Americans in the long run. I would look at the generics and the biosimilars industry being on the right side of that conversation, and which is why you see that the policies that have come up have always excluded pharmaceuticals and specifically excluded generics and biosimilars from any of these tariff discussions, because it is really these products which make healthcare affordable. We particularly have seen that it is in the interest of both the industry as well as the American population to see that we continue to bring these life-saving drugs to patients who really need them. So it's really been a positive development, and we see that to continue going forward.
All right, you already have a strong U.S. insulin footprint via the interchangeable biosimilar insulin Glargine, but it's a diverse market and incredibly complicated with huge competition. So how soon and at what scale do you expect your new U.S. insulin and GLP-1 facilities to really meaningfully contribute to revenue and margins? And what are the key risks, really, that could delay that ramp up?
First up, when we got into insulins, we got into insulins around the start of the millennium, so around 2000, 2002 is when we actually began. We launched it in 2004. So we've been in this space for a little over 20 years now, so we understand this very well. We first thought that availability of insulin was a developed world or developing world problem until we realized that access to insulin, which was a life-saving drug, was not limited just to the developing part of the world. There were several people in the developed world who were still denied access, and we saw that become such a major issue even in the United States, where administration after administration, there was bipartisan agreement that we needed to find a way to make insulin treatment affordable. People were rationing their meals to be in a position to afford their daily dose of insulin. What you see today is Biocon being that option, that solution to bringing that high quality interchangeable biosimilar insulin. And I'm happy to tell you we're the only ones who are being able to do that, creating an option which then makes things affordable. You saw our recent announcement where we partnered with the state of California, where we will bring a California or a CalRx branded insulin glargine to Californians at a very affordable price. That's the strength of our commercial platform, where we can bring product direct to farmers. And we would, you've done this with California, we would expect to do this with 49 other states in the United States. So we believe there's a massive opportunity, whether we make the product in the United States or outside. I think the idea is, how do you make it accessible to millions of those patients who need it?
All right. It's interesting that you talked about your footprint, really, and we have a particular graphic that's reflecting that. We'll continue to showcase that as I ask this question. I just want you to break it down a little bit, paint a picture of the strategic focus on the US, the EU, and emerging markets, and also just include a little bit about Johor Bahru, how perhaps you're trying to take advantage of different tariffs in different regions. Just give us a sense of that.
Yeah, no, that's very important. I think one of the things that we've done is we are a very diversified business in terms of how we've grown our business. So just to give you what I mean by that is our business in the United States contributes to about 40 to 42% of our revenues. Europe would be 30 to 35, and the rest of the world is around 23 to 25%. That makes up the 100. So that tells you we're not dependent on any one country or one geography. We've been a global company. We sell products, we commercialize them, bring them to patients in over 120 countries. Now, coming to the aspect of manufacturing, we've always had facilities which manufacture product for the world. So the Johor Bahru facility that you talked about is a facility which makes product for the world. It's the same with our facilities in Japan or our facilities in India, or the ones that we've used in the UK, or the partnership we've signed with Civica, which is to see that we manufacture and finish our drug product, insulin drug product, in the United States. So the idea is to always build facilities with one global quality standard, because you can't really place a differential value on human life, which is why we have one quality standard and one product that is developed for the entire globe.
All right. We've interviewed a couple of pharma leaders in just the past few days, and all of that has got to do really with earnings. And everyone has said they're in a great place to capture the Indian market and other markets also, but particularly the Indian market. I just want to understand what sets you apart, given there is such a boom around weight loss drugs.
I think what sets us apart is that we've been focused on debilitating diseases, Amitoj. And nothing against the other ailments, we need all of them. But the areas that we have focused on are oncology, cancer, diabetes, we just talked about, which I personally believe is a pandemic on its own, a silent killer in that sense, and autoimmune diseases. So if you really look at it, each one of them don't just affect the individual who is diagnosed of it. It can actually affect the entire family, given that in most places there is a single breadwinner or two breadwinners, and then it kind of makes a huge impact on what the healthcare costs can be. So the area that we've focused on is how do we transform lives of patients? How do we transform healthcare by making high quality drugs affordable? And which is why we are a fully integrated company. We develop our own products. We have manufacturing facilities which are at global scale. And we have our own field force in several countries. That gives us the ability to really reach patients and make that difference.
All right, sir, thank you very much. Unfortunately, we don't have more time. I'd love to speak to you much more. I appreciate you coming on and talking to us. Thank you so much. Shreyas Tambe from Biocon. All right, we're counting down now to the market open in India. This is how things are shaping up. Remember, we've just had Donald Trump, US President Donald Trump, going ahead and ending that shutdown by signing the bill that came to him from the House. Take a look at what's going around right now. We're looking at a muted open, but a positive one. It might even go ahead and inch a little closer to that psychological mark of 26,000. Nifty 50 at 25,875 at close on Wednesday, on hump day. But at this point in time, the hopes will be on two things: the US government shutdown ending, and of course, the inflation numbers that have come in. They have been positive. How the Indian market reacts to that will be interesting to watch out for. We'll also be watching the US dollar India rupee situation. At this point in time, the Indian rupee once again weakening against the US dollar. All right, let's switch gears now and head straight to the Singapore Fintech Festival. Stablecoins are really all the buzz there in the payment space. My colleague JP Yong is out there. JP, I've missed you, man. I've missed you. And I was there yesterday at the Singapore Fintech Festival. And man, is it buzzing? Is it really buzzing out there? I couldn't make sense of where to go. There's so many discussions, so many people. How are you even managing?
I mean, imagine if you're in a place like this where you're trying to balance and try to keep track, not just of the many technologies everyone's talking about here on Singapore Fintech Fest, but what everybody's opinion is and the number of players that you're trying to keep tabs of. As you can see here, Amitosh, it seems that the excitement and the buzz has not died since you were here just the other day, and it continues to be that. And a lot of the discussion really not just on stable coins, but on how stable coins and how digital assets might transform the way we do business. And for payment platforms, the question really is simple. How do we get more seamless, more effective, and more efficient payments and payment transfers from one agent to another, and also crossing borders, geographies, and different businesses and sectors as well? And that's something we want to pose to one of our next guests, Chris Newkirk, who is the Vice President for Commercial and Money Movement Solutions. And there you go, have it, within the title, Money Movement Solutions. How do these technologies perhaps transform, enable, uplift, or even disrupt the way we transform we transform business, or make sure that money transfers from one place to the other, and how that's actually changing the way Visa does business on a day-to-day. Chris, thank you so much for joining us today on the sidelines of the Singapore Fintech Festival. I want to start off first with one thing that one of the events that's really captivated a lot of folks in the fintech space, really, and that is the recent act in the U.S. that's really lifted a lot of impediments, at least with regards to how you conduct business in the digital space and how you can enable stable coins and digital assets into these areas. Since that landmark Carry Act, actually, how have things changed actually for Visa in the last 5 months?
JP, thanks so much for having me here. Really excited to be here, and excited also for the passage of, you're referring to the Genius Act, yes, in the U.S. And look, we're excited about that because stablecoins, what the Genius Act did in the U.S. was provide a legal framework on which there will then be regulatory scaffolding to set the rules for how stablecoins will work, at least from U.S. domiciled companies. And the reason that's exciting to us is because stablecoins as a payment or money movement technology really represent a significant advancement in terms of digital programmable money. And at Visa, we've become a hyperscaler for anyone who wants to move money or be in the payments business. And we do that by giving them access. Our clients, we give access to what we call the Visa as a Service stack. And what we'll do with stablecoins, and what we're already working on, and I'll give you some examples, is really ingesting that stablecoin technology into that Visa as a Service stack to take advantage of some of the really unique properties of stablecoins, not just as a currency, but as a technology to move money seamlessly, domestically and cross-border, 24/7 by 365, not reliant, for instance, on traditional banking hours. And so when I say bring those capabilities into the Visa as a Service stack, if it's okay, I'd love to give you a few examples
Absolutely,
of how we're doing that. So I'll start with the part of the business that we're probably best known for globally still, our card business. And so we have launched more than 130 card programs where our partners are issuing Visa cards that are linked to stablecoin accounts. And so if you think about users around the world, whether they're consumers or businesses who are holding stablecoin wallets, what we've done is we've linked a Visa card to that and thereby given those users the massive utility benefit of being part of the Visa ecosystem so that you can use that Visa linked stablecoin card at more than 150 merchants globally for consumer transactions or for B2B transactions. So that's one way in which we've given access to the Visa as a service stack for stablecoins. We're also bringing our value-added services to the stablecoin world. For years, we've been engaged in crypto and stablecoin to help our clients with our consulting arm figure out what are their strategies and how do they prepare themselves for the future. But increasingly, we're bringing real solutions and value-added services. We have a capability called Pismo, which offers what's called issuer processing to actually enable those Visa-linked stablecoin cards. And we've publicly announced our first deals in the Pismo issuer processing to, again, enable people to access the global Visa ecosystem. And the third example I'd give you is the part of the business that I look after, which is commercial and money movement solutions, where we've announced 6 weeks ago some pilots for stablecoin, what we call pre-funding, which I'd love to describe to you. And we just announced in the last 24 hours the pilot to push out payments to stablecoin wallets around the world. We're piloting starting in the US, but all of these pilots are about doing everything we can to learn so that we can deliver our ecosystem and all our brand stands for in terms of trust, security, reliability, compliance to these new payment technologies and make them more universally available.
It seems that stablecoin in some way is a bit of a watershed moment, and it's really enabling a lot of payment platforms to do more. Is the name of the game to get frictionless at all costs? Because you have to balance that also against security issues as well. How do you reconcile the two and make sure that both of them actually work together? It doesn't become an either-or, Chris.
Yeah, JP, that's incredibly well said. So, what stablecoins and other digital payment technologies do is they remove friction for users. So stablecoins, I think, are particularly exciting at the moment for cross-border use cases in corridors where it can often take days for the money to move from point A to point B, and that's money, that's capital tied up that either consumers or businesses are not able to otherwise put to use. And so yes, stablecoins and other digital payment technologies are about removing user friction. However, as you so eloquently put it, it's key when you're removing that friction to also deliver a safe and secure and reliable experience, and that's where I think Visa really shines, because we have invested billions of dollars over the past many years to be fighting fraud and delivering a very safe from fraud and a very safe from cybersecurity standpoint experience for our clients on both sides of the ecosystem. And whenever there's a new payment innovation that removes that removes friction, some of the first users who run into that space are fraudsters who say, well, how do I take advantage? This money's moving instantly. How do I come up with a scam or a scheme to try to get access to that? And that's just the state of nature as digital payments evolve. And so our role is exactly as you said, it's to help remove that friction, but do it in a way where fraud is very low, user expectations and standards are very well understood, and that's the role that Visa plays.
Just very quickly, Chris, there's so much to cover with just a little bit of time left. Do you think that stablecoins are going to become the primary way you conduct business and do transactions across business over the next next 3 to 5 years? And will this fundamentally change how we're doing and how we're transacting, how we're transferring money today?
Yeah, that's a great question, JP. I don't know that my crystal ball is any better than yours. I do think there's real product market fit for stablecoin, both in terms of people, businesses, consumers, what have you, who want access to maybe a more stable currency as opposed to a local fiat currency. but especially in cross-border payments, which, as I said, can sometimes still around the world take days. Our role isn't to predict necessarily that future and to pick a winner or a loser. Our role, as I say, is to ingest these capabilities and deliver back solutions for our clients on both sides of the ecosystem that deliver great, seamless experiences with security, reliability, and transparency.
Chris Newkirk from Visa. It looks like it will be very exciting and perhaps also uncertain but exciting next couple of years for Visa and also the broader payment space. We thank you so much for joining us today on the Silence of the Singapore Fintech Fest and sharing your insights as to what the future might hold, given all these new exciting technologies that could transform or even disrupt the way we conduct and transfer money. Appreciate the time, sir.
Thank you.
Avatar is going to be, we're going to have to throw it back to you, but again, more conversation on the sidelines of the Singapore Fintech Fest and a lot more to wrap our heads around and just enough time to catch our breath as we try to ingest and understand what these technologies will mean for the transformation and disruption of how we do and conduct payments. For now, it's back to you guys.
Thanks so much for that, JP. Yes, the world of stablecoins is right now dominated by the likes of Circle. When Visa, MasterCard, and the other big boys really come in, that's going to be an interesting war to watch out for. Thanks so much, JP. All right, Indian markets have joined the trading day. We will talk about that in just a bit. Don't go anywhere. Welcome back. This is Inside India. Indian markets are coming online. The Nifty 50, it's, well, slightly down, slightly. Things seem flat right now, but you can expect there'll be movement. Inflation numbers have been good. The US shutdown is over. Donald Trump, the US president, has gone ahead and signed it. The trade deal is looking pretty close in his words, so we can expect some positivity to continue. Remember, the last 3 sessions have been positive. That's what we'll be looking at. The US dollar to the Indian rupee, that relationship is getting trickier. We're getting closer to the low, the record low, and will the RBI really intervene is the big question. We'll continue to track that. We're coming to you with more details on the inflation number, on the market in just a bit, but I want to go ahead and give you a sense of something else that the market is tracking, and wow, it is quite phenomenal what has happened. The shares of Grove's parent, Billion Brains Garage, yes, that's the name, are opening on their second day of trade. The parent firm of broking platform Grove surged in trade yesterday, taking the firm's valuations to $8.6 billion. Grove's debut comes at a time when India is seeing a surge in IPO activity, with more than 300 companies collectively raising $16.55 billion in 2025 so far. Look at that stock right now, up 4.20%. But back to the macro side of things, the latest inflation read in India is boosting hopes of a rate cut by the RBI when it meets next month. Headline CPI just cooled to a record low of 0.25% in October, driven by cheaper food and tax cuts on consumer goods. And this number is well below the RBI's 2 to 6% target band. Joining us, Radhika Rao, Senior Economist and Executive Director at DBS Bank. Thanks so much for joining us. I have to start by asking you, given core inflation is still elevated, there is tariff uncertainty, should RBI save its firepower and not cut in December?
Certainly, I think it's going to be a very close call because of two reasons. Like you rightly mentioned, inflation has been on a downtrend. In fact, October inflation was at a series low at 0.3%, not too far from what our forecast was. And then you're also looking at a November that's going to be quite tepid, I would say under 0.5% as well at this point. So with this kind of an inflationary backdrop, you have an inflation undershoot, but growth overshoot. To mean growth is likely, according to our own forecast, going to be stronger than 7% in fiscal 26. That's the annual year that we are in. Given this kind of a combination, certainly for the central bank, it's not an easy decision to be made. But yet, I think when you saw them speak, the governor speak in October, it did seem like, he was kind of signaling a dovish pivot and to mean that, if there is space, they would go ahead and cut rates. At this point, they can't highlight growth risks, at least near term. But I think they could mention that inflation is low and we are going to revise down our inflation forecast. And hence that opens up a bit of space. Of course, they could also flag forward-looking inflationary risks. And the third dimension to watch out for is the US-India trade deal, something that you mentioned at the very beginning. If that comes out, suddenly that lowers the pressure for them to cut rates. So net, we do think that this is going to. I think the data has created a bit of a policy debate, but we see a slightly more than even chance that there's likely to be a cut.
All right, slightly more than even chance. With uncertainty about a Fed cut in December, should the RBI hold off cutting to avoid further weakening of the INR? A separate question related to the rupee.
Certainly, I think what a Fed does figure in the central bank's dashboard. But I don't think it's something that they attribute too much of weightage to. I think it's still very much domestic driven and domestic considerations driven. From that point of view, I think what will matter to them certainly is what the growth is doing and what inflation outlook is going to be. Insofar as the currency is concerned, I do think, when we follow the currency movement this year, up until April, May, in fact, you see dollar rupee kind of tracking what the broader dollar was doing. And thereafter, as these tariff rates became known, you've actually seen a tear between where the dollar is and where the rupee is, and some amount of underperformance in the rupee. I do think that a trade deal, if imminent, if announced sometime mid-November, would provide us a bit of a breather to the currency. And weakness in the currency at this point, when energy prices are low, means that inflationary risk is also not that big. So I would say, yes, currency matters, but I think they would perhaps prefer to do a bit of an intervention attempt on it rather than try to fine-tune the currency because of policy rates. So yes, I do think that it will matter to them, but weightage will not be as high as the other macro considerations.
Okay, since you are really mentioning this point that they may have to effectively wait for a tariff deal to decide, and that'll be a big factor. I just want to get your understanding on this. A couple of things, all right? Point one, the former RBI governor, D. Subbarao, he told us earlier this week that according to him, it is possible that the government is waiting for the Bihar election results, the elections in the eastern part of India, to go ahead and announce anything related to a tariff deal with the US. How do you view that? And also, there is populism in that particular election ongoing. It's a big debate in India, welfare populism. Do you see that particular aspect impacting the outlook, the fiscal outlook particularly?
Yeah, I think the markets are really not very keen to run ahead of the news, I think, at this point, because these negotiations and the trade deal has been something that has kind of appeared on investors' radars time and on. So I think there is this time around we see rupee has seen a bit of appreciation. Markets Bond markets not really worried as much, and equity markets are certainly in their own rhythm. So there is. I don't think the trade deal as yet has been factored in, and this is, I think, to do with what's happened in the past. Now, insofar as the timing, one can assume that it could be mid-November by the time the state election results are also out. But if you've seen some of the front-running comments by the government officials, they've also kind of mentioned that there won't be too much of a farm sector element in the deal. So the nuances will really matter for the man on the ground as well as businesses. But at this point, I think India has already put forth its view. It is that, better market access. They're going to buy, a bit more of U.S. energy supplies, defense supplies, and I guess in return, U.S. would prefer having some amount of access to domestic Indian markets as well. Insofar as the Russian oil purchases are concerned, that's thanks to the sanctions, thanks to some of the other action. I do think that the private refiners have cut back on their purchase. So I think as a first cut, we could see the 25% additional tariff rate being removed, just basis on what the administration has mentioned. But the second 25% we think could be lowered by about 5-6%, taking it on par with the region.
All right, Radhika, unfortunately, we're completely out of time. So Radhika Rao from DBS Bank, thank you so much for joining us. A lot happening. We'll be coming back to you, I'm sure, for more later. But that's all the time we have today on the show. You've been watching Inside India. Thanks so much for that. Keep watching CNBC. Access Middle East is up next.